to have you join us today. Hello and welcome to Business Daily. I'm Iji in Seoul. Before we get started, let's first get a quick look at today's highlights. The latest FOMC policy statement may be suggesting that the U.S. is now more worried about inflation and less inclined to raise interest rates come March. We sit down with an expert to talk about this. Korea's two biggest airlines have lifted their fuel surcharges thanks to low global oil prices. Carriers seems to be enjoying the benefits, but are there passengers? But first, the ongoing slowdown in the tech sector is turning up the heat on Samsung Electronics. Tepid global demand for IT products caused the Korean firm's profits to slump in the fourth quarter, and the company says this year is going to be even more challenging. Our Kim Min-ji reports.
Korea's biggest tech firm saw its profit fall sharply in the fourth quarter of last year. Samsung Electronics says its net profit came to $2.7 billion in the October to December period, down almost 40% from a year ago. The sharp downturn came despite a 16% on-year increase in operating profit and sales edging up over 1%. Breaking it down by sector, Samsung's chip arm, which has been the company's core business, posted an operating profit of $2.3 billion, slightly higher than last year. Its IT and mobile division, which has been weighing on earnings, edged up to $1.8 billion. The operating profit of Samsung's consumer electronics sector jumped more than fourfold to $680 million, driven by strong sales, especially in the U.S. Analysts attribute the weak earnings to slowing chip and smartphone sales and weaker prices of DRAMs and LCD panels. Samsung wasn't able to benefit from exchange rates in the fourth quarter either, compared with the previous quarter, which gave Samsung gains of about $660 million. The company says earnings could weaken further this year due to a difficult business environment and a slump in demand for IT products. Kim Min-ji, Business Daily.
With sanctions against Iran lifted, Korea is working to expand its economic ties with Tehran. But first, Seoul wants to ensure a long-standing payment system that's been used since sanctions were imposed remains in place. For more on the system and why this is important to Korea, our Lee Ji-won reports.
Officials from Korea's finance ministry, foreign ministry, and banks will meet with their Iranian counterparts during a three-day trip that starts Saturday. According to financial institutions on Thursday, their talks will focus on maintaining the Korean currency payment system and expanding the payment system to include euros and other international currencies. The system is an alternate channel through which Korea and Iran have been able to do business since sanctions restricted all financial transactions with Iran in 2010. Under the system, Iran had accounts in Korean banks to facilitate trade in oil and other exports. As oil prices rose along with the increase in Korea's oil imports, the balance in the accounts grew massive, with the current amount estimated to be between $2.5 and $3.5 billion. Earlier reports indicated that Iran might be planning to withdraw its money, though the Korean government denies this. Still, the news has sparked concerns in government and financial circles, as a move like that would have a significant impact not only on Korean banks but on economic ties between Korea and Iran. Lee Ji-won, Business Daily.
Depressed consumer spending looks to be further weighing down Korean companies' business sentiment for next month. The business survey index for February showed that pessimists outnumbered optimists, coming in well below the 100-point threshold at 86.3. Now, that's lower than levels seen following the Seoul ferry tragedy and as low as July when the nation was dealing with the aftermath of the MERS outbreak. The survey conducted by the Federation of Korean Industries on 600 local companies showed that weak consumer spending topped the reasons for their gloomy outlook, followed by slowed growth in China. Business leaders were also pessimistic on investment, employment, and profitability despite the upcoming Lunar New Year holiday. And weighed down by plunging oil prices and sluggish global demand, Korea's consumer prices are expected to remain below the central bank's target this year. In a regular report on Thursday, the Bank of Korea said prices will rise 1.4% this year from 2015, down from its earlier forecast of 1.7%. Now, the latest projection misses the target of 2% set by the BOK for the years between 2016 and 2018 amid feeble recovery momentum. The bank has also said that it will maintain its expansionary monetary policy, and next year the bank expects prices to grow 2% as global oil prices will gradually pick up. Meanwhile, the U.S. Fed Reserve has taken a wait-and-see approach, leaving interest rates steady this month. On that, U.S. shares plunged as the Fed gave no indication of when it might start lifting rates again. Our Hwang Jie has the details.
The U.S. Federal Reserve opted to hold its key rate steady on Wednesday. The Fed said it was closely monitoring global and financial developments and how they could affect the U.S. labor market and inflation. Plunging oil prices coupled with the slowdown in China resulted in a massive sell-off in global stock markets early this year. This turmoil had fueled speculation that the Fed may back away from its plan to tighten its monetary policy this year, but the central bank gave little indication of when it will raise rates again. Last month, the Fed increased rates for the first time in almost a decade and suggested 4 more rate hikes this year. As investors were hoping for a stronger sign from the Fed that could dismiss chances of a rate rise in March, major indices on Wall Street dived sharply on Wednesday. The S&P 500 closed down over 1%, while the Nasdaq dropped more than 2%.
And I think from an equity market perspective, where companies have been facing difficult pricing power, difficult global economic conditions, difficult domestic economic conditions, having a Federal Reserve that's not your cheerleader is just not well received, and that's why we're having the response we're having from the markets.
And with this latest Fed statement, volatility remains in the markets, although analysts widely believe a second rate hike in the first quarter will be unlikely. Asian stocks opened to a rough start but closed in mixed territory, while Korea's benchmark Kospi shrugged off earlier losses and ended 0.5% up on Thursday. Hwang Jie, Business Daily.
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you.
Pleasure to be here.
So before we dive into the FOMC policy statement itself, let's first talk about what this means for the global economy.
Well, FOMC's statement reflects their views on U.S. economy and global economy together. So this is very important information for investors and market participants. But this time they expressed something growing concerns on global economy.
Now, the statement, like you said, the statement actually noted that the U.S. economic growth slowed late last year, replacing language that said the economy was growing at a moderate pace. Now, what can we make out of this?
Well, this month, FOMC statement sees only 2/3 of the last month, which means that they became more cautious on U.S. economy. So U.S. economy is not under recession, but the fears under one are growing fast. So because no economy is isolated these days because of these spillover effects, particularly from China and emerging markets like Russia and Brazil.
Right, and also on inflation, the Fed repeated that its 2% target will be harder to reach in the near term. Can you tell us more about that?
Right, we have 2 reasons for that. As we all know, the fastly declining oil price and a continuing global recession. Because of these 2 reasons, the inflation rate of the United States will be lower than a 2% level.
And another part to note from this statement is that Fed actually dropped the word balanced in describing risks to its economic outlook.
Well, as you mentioned, the greatest risk of the global economy is China factor. So the fact is that we do not clearly know what is happening in China. All the macroeconomic official data is questionable, and no one answers exactly how much Chinese economy baddies. That gave a big impact to global financial market in U.S. and Korea altogether.
So I guess it's fair for us to say that the Fed feels that there's less confidence, I guess, about the U.S. and its economy because of the China risks and the risks stemming from emerging markets. Now, some are even saying, though, that the U.S. rate hike last month was actually the one that triggered more risks from China as well as slowed growth in the U.S. What are your thoughts on this?
Well, even though the concerns of the United States economy is growing, U.S. economy is such a great shape, actually better than any major economies. So the last month's hiking interest rate was a right decision, I believe, because to avoiding the possible inflation in the future.
All right, looking at the statement, though, it seems that the Fed is less inclined to, I guess, raise interest rates again coming March.
Right. So the original expectation about the Fed interest rate hiking strategy was very steady. They was supposed to increase interest rate by 4 times, by 0.25%, one by one. But it became kind of negative for March's interest rate hikes.
Well, let's come back here in Korea. The central bank also said in a regular report on inflation today that the economy is expected to continue its recovery based on consumption, but lowered its inflation target for the year, which seems to be more in line with global inflation trends in general.
Right. As you said, global inflation trend is declining. So the Bank of Korea's inflation target, which is 2%, is one of the lowest in the history. So that 2% inflation rate target of the Bank of Korea reflects a lower than expected GDP growth rate of this year.
Do you think that target is reasonable, though?
Exactly. Yes, I believe so. That is the appropriate target because Bank of Korea is reiterating that inflation stabilization is important, but more important is booming the economy.
Now, some are even calling on the Bank of Korea to lower its key interest rate even further from its current record low of 1.5%. Do you think there is more room for any more downward adjustment this year?
Well, that is a very sensitive issue between Bank of Korea and Korean government and Congress. Congress and Korean government is pushing very hard Bank of Korea to decrease the interest rate further. But Bank of Korea is reiterating their position on monetary policy, which is there won't be any further decrease of the interest rate without structural reform.
All right. Thank you so much for coming in today, Professor.
Thank you very much.
Korean mortgage loans grew at breakneck speed last year on the back of record low interest rates and skyrocketing home rental fees. The Financial Supervisory Service reported that the amount of outstanding mortgages in December was just over $5 billion, bringing the total amount of fresh loans in 2015 to $58.3 billion. Now, this is the largest increase in mortgages since 2011. At the end of last year, the total amount of home loans was slightly below $395 billion. Meanwhile, the overall delinquency rate on won-denominated debt as of end December fell to the lowest level since data was kept. The financial watchdog says this is because banks wrote off overdue bonds worth over $3 billion before the new year. Korean Air and Asiana Airlines have both announced that they will scrap the fuel surcharge on all international and domestic flights next month, all thanks to low global oil prices. But how does this stack up against the savings national carriers are enjoying? Our Eunice Kim takes a look.
The cost of jet fuel that propels planes up has been falling since 2012. Singapore kerosene is the widely used regional benchmark, and on trend with the wider crude oil market, it plunged to $65 per barrel last year, $47 per barrel vaporized from the year before. This was no doubt good news for airliners. Korean Air is said to have racked up nearly $1.4 billion in fuel savings alone, while Asiana Airlines, which burned through about half the volume, still saved some $697 million, thanks to under $100 oil emerging for the first time since 2010. This also translated into a boon for their operating profit. According to Kyobo Securities, Korea's flagship carrier is projected to rake in 52% more in 2015 on year, while number 2 Asiana is also poised to see a 12% growth. But travelers say they aren't feeling the savings.
Despite falling oil prices, plane tickets are still too expensive.
I was looking forward to some type of discount, but it looks like my trip will be over budget.
While the fuel surcharge has been scrapped, the base fare is not up for a revision. Airliners say this base cost won't shift when oil prices rebound either, just as it was kept when oil prices began their ascent in 2010. They add few travelers actually fly at their official ticket price found on their websites, as deal seekers turn to on- and offline travel agencies for a bargain. And as the Korean won has been weakening against the US dollar, this could be watering down any sentiment of savings from the scrapped fuel surcharge. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks so much for watching. We'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching and goodbye.